Hey everyone, hopefully you're having a good day. My name's Andy. My channel is Finding Value. Today we're going to go through Twitter, see what people are sharing on social media. I'll interject my financial opinions as we go through it, generally related to three different topics: wealth building, commodities, and or financial topics. So we're going to dive in, take a look, and see what people are sharing. Uh, if you want to follow me at Finance Square Finance, and if you want to join our community, finding-value.com, we've got a special coupon code going on. It is called Special. 50% discount on the first month only to try it out. And you can always swap over to a yearly membership if you like what's going on in the community. It's the same discount coupon code, and it's a larger discount. So North Star, gold versus NASDAQ. This must break out to confirm a full-blown capital rotation event. So we're right there trying to break out gold, trying to outperform the NASDAQ. The NASDAQ is barely hanging on, and gold is ripping. Now, we've got all these, things going on in the market with surrounding gold, maybe even surrounding other precious metals. And what I'm talking about is the lease rates are ripping in some of these things. We're starting to see delivery delays in gold. I mean, guys, this could get blown wide open. And the way that they've held inflation in check is they've sucked all the money into intangible assets like crypto and into the stock market labeled the NASDAQ. That's where all that money went into, and now it's starting to rotate. So what happens is money is going to get sold out of these intangible assets and move toward real things. It's going to be inflationary. The money is already in the system. It's already in these stocks and in these hexadecimal digits that we call Bitcoin, even though it's not a coin, it's just a bit. So when this starts to break, and if the LBMA has problems, and if they can't deliver the metals, and if this whole damn thing collapses in terms of the paper markets, well, this could get pretty interesting, is what I will say. And gold, the reason they put so much pressure on gold is because that's our measuring stick. So if gold blows to the moon, I have a feeling that everything in commodities will blow to the moon. It happened in the 1930s when they revalued gold and commodities were revalued with it. It happened in the 1970s. Commodities took off and gold took off more because it was so undervalued and it was artificially held down. What do you think it is now with all the paper markets? Yeah, you said it. It's artificially held down. So what do you think is going to occur? Explosions to the upside are definitely possible. Do I know when? I don't know when. I'm already in this stuff because the ratios told me I should be in it. So am I in it to win it? I am. I am. I'm just going to sit and wait. Here's Eric. He says, Sanford Bernstein corroborating our view that U.S. shale has entered its twilight. I'm often asked what could be the catalyst to jolt bearish sentiment. This is it. Quite the contrast between drill baby drill and peak U.S. shale. Guys, we knew U.S. shale was there. We just didn't know how to extract it. So if we peak out here and demand continues higher, where's the oil going to come from? Well, I know a country that can still export more oil. And you know what? It's very few countries in this world that still have increasing exportable capacity. What do you think the value on that oil could be in the future? I'm going to say it's probably going to be a crap load. I also think that we've got a lot of offshore drilling to do. So when shale starts to peak here, which it already has, and where you come out of seasonality of February being kind of a weaker month, we could see some crazy stuff occur. We could, and we're very undervalued in the price of oil in relationship to gold and in relationship to the dot plot of commercial inventory levels. We're about $15 or $13 undervalued. Here's Eric Yoon. He says, I always said that the best way for the U.S. to secure a dominant position in the new multipolar world order is to take the lead in the remonetization of physical gold ahead of the BRICS competitors. It seems that the race has finally begun. Gold and silver milkshake is final phase of milkshake, and it is happening now. BJ Milkshake got lazy. He never imagined a gold and silver milkshake, which is the US sucking off gold and silver from the rest of the world at an accelerated rate. And I did not do that on, that was on purpose, guys. So the founding fathers of the United States of America have intended gold and silver as the only lawful money in the country. U.S. Constitution states no state shall make anything but gold and silver coin a tender payment of debts. The banksters corrupted and perverted this with paper IOUs and the creation of the Fed. That is 100% right. Well, let's blow this thing up in the LBMA and all these exchanges. Let's do this. Markets in mayhem. Commodities are enjoying a strong start to 2025. Coffee up 35%. That's pretty big. Copper's up 17. Platinum's ripping 13.64. Notice that platinum is outperforming silver. And it's also outperforming. Let me see. Is gold on here? I don't know if it's outperforming gold or not. There's gold. Gold's up 10%. Platinum's outperforming. What did I talk about that ratio? When platinum outperforms gold and the ratio goes up, that's when stocks underperform. That's when your commodity bull market starts to get off the ground here. So hopefully that continues. Natural gas is up 13.5% this year. Silver's up 11%. Palladium's up about 11%. Those are your big boys. And guess what? I'm all in. I'm in a lot of these that are up here at the top. Now, my boy crude oil, it's struggling already, but I think we'll get the break, and I think we'll have a strong summer, hopefully. Here's momentum structural analysis. There's widely followed precious metals analysts saying that because gold's MACD reading is higher than it was in 1980, I can make a guess here. Is it Brady? It's therefore overbought. Think about what MACD is for a moment and why you can't compare anything in nominal numbers today to something 40 years ago. I welcome all of the bearishness, doubting, and hand-wringing. Please, by all means, listen to this analysis and let the rest of us continue to buy. In fact, we should be thankful for this. Speaking of the MACD, gold is overbought here, but it went straight vertical. This is Germany, value of one gold mark in paper marks. Guys, this isn't a time to be looking at MACD and relative strength indicators. It's not the time to be selling and waiting for a pullback. This is ridiculous. This is like you're in the Super Bowl. You get hit pretty hard on the first play, and you're like, I'm just going to give up. It's like, dude, you're in the Super Bowl. It's ready to go. This is what could come. This big move, if everywhere in the world they're devaluing gold, and gold is just starting to outperform financial assets, this isn't the time to sell. That's absolutely ludicrous. Ludicrous. Do not take short-term little stupid metric readings like RSI or MACD or any of those stupid things. Look at the valuation in relationship to other items in this world. And then look at the potential runway that it can go to the upside. I'm not saying that this will happen here, but I bought this stuff so cheap, it is ridiculous. I'm surprised that it's even at the same location roughly in some of these assets that it was a couple of years ago. It's a gift. It's a freaking gift. Central banks aren't buying gold for fun. They're preparing for what's next. You can't just leave me hanging. What do you mean what's next? What do you mean? Are you talking war? Are you talking like they're going to print and we're going to go into some other currency? Like what's going on here? What do you mean they're preparing for what's? Is that war? Is it the currency that's going to fail? Is it a revaluation of something that needs gold back? I don't know. I don't know. Here's Gray Rabbit Finance. I tuned into the LBMA webinar this morning. According to Ruth Krull, the chief executive of LBMA, there's a shortage of guys with vans to move the gold. Starting to think these vault numbers are cooked. Really? That's your excuse? Guys, we couldn't find any guys with vans. That's the stupidest excuse I've ever heard in my life. So, more than likely, they don't have the gold. That's my guess. So, the question then becomes, do we sit here and watch more YouTube, or do we start, mouse clicking buy on some of my favorite products that are gold and silver and some of these other areas? Because if this gets out and people start to panic, whomever that may be, how long do you think gold's going to, exist and for us to purchase? I think it's going to get eaten up pretty quick. And look at the silver. Look at this inventory down here. That's pretty low. This stuff, guys, I think there's all sorts of leasing going on, um, gold leasing, loaning out metals. I think it's like this one little pile that they've got in the back, and they just like keep it on this like circular rotational program where some gold comes in and then they lease it back out and they just try to keep everyone happy in the system until there's just too many people asking for physical gold. Then I don't know what happens. Like, I don't know where the price goes. I guess it just goes vertical goose. Against all odds, he says silver tends to lag gold until it doesn't, then it rips. Gold's making moves. Does silver catch up this time? Come on, guys. You think it's not going to catch up? Silver's going to do a moonshot. There's going to be a silver squeeze. Now, I know people like talking about silver squeezes and all these things. What's the exact cause? I don't know. It doesn't matter. That's going to be behind us. We'll get the news later. If you want to be on the front, you need to look at ratios. You need to look at the patterns. This is already broken out of the pattern here, guys. It's game on. So you can do whatever you want, but it's game on. It's ready to rip. Gold already left the building. This thing's got rocket boosters. It's like trying to get lit, the rocket booster, so this thing can rocket boost all the way and pass it. Silver's going to do crazy stuff. You can do stuff with the mining equities if you want and put a little leverage on it. But the physical metal, it's the least risky. Forever. So OPEC likely to extend oil cuts on tariff risks. Morgan Stanley analysts, forever, they're going to extend the oil cuts. What if that is forever? What if they don't have as big of a spare capacity as what everybody thinks? I don't know. I think they have a little bit of spare capacity. I don't know how much though. Gold's up 46 bucks today, closing in on 3,000. Epic move, up 18% this year. What's this move telling us? That fiat currency measured in US dollars is crap, is what it's telling us. That we're about to enter a commodity bull market is what it's telling us. That a whole bunch of people that are stuck over in dollar denominated assets is about to get steamrolled. Those are some off the top of my head. Rock bottom entries, know this. The biggest gains come late in the cycle. No kidding. I like that. Juniors are just starting to break out, and historically, they peak well after the metals. Well, I'm already there, so let's get this thing going. Here's North Star. Capital rotation has occurred for the equal-weighted S&P 500. That's got a clear breakdown there, and I'm going over this because, guys, this is a big deal. This is a big, big, big deal. When this stuff starts rotating, this stuff right here starts rotating and outperforming, money starts rotating. People take notice. The FOMO boys start FOMOing into the stuff that we were sitting in and that we had we could easily stroll into our companies picking the best of the herd and just buying them all up. And now we just wait for the herd to come in here and start FOMOing at the mouth. So it's going to all start coming. Here's another one. Capital rotation has occurred for Wilshire 5000. Gold breaking out against the Wilshire 5000. It's a breakdown here. the way he's got it put. It's only a matter of time before we will start using a log chart for gold. Well, what does that mean? Well, it means it's about to go vertical. It is going vertical. So what are people waiting for? Oh no, let's go buy some crypto that we're going to hold these digits on my cold storage. And then when they shut down all the on ramps and off ramps to transfer that into currency, what am I going to do with it? I don't know. Gary Savage, the cartel is working overtime to hold the suppression on silver. There are billions at risk if they fail to stop the breakout above $33. And then he comes and says they're going to fail. The short squeeze is going to be epic when the manipulation collapses. I think it happens sometimes this week. Well, he's calling this week. I don't really care. I'm in silver. I can't even carry the silver. I don't even have a car that can tow it. That's what I'll say. All of it. So I'm ready. I'm ready for this thing. Let's blow the roof off of it. Nearly everyone's expecting a large quarter one stock builds. The opposite is happening. Why? Demand is exceeding bearish expectations. U.S. shale growth is stalling, and OPEC plus cohesion is strong, and compliance has improved. Guys, you can't make this crap up. I mean, if your inventory level's way down here and the price is lower than a lot of these years, I mean, it's such a good opportunity. Do you think that oil's just going to come flying off some inventory somewhere? Do you think shale oil is just going to accelerate to the upside? I mean, the only thing is that you get a demand destruction event. And it is still possible. That's the possibility. I wouldn't bet on it, though. Shabam Garg says global crude inventory is drawing heavily to the start of the year, completely contrary to projections and narratives. Oil demand has slightly underperformed. However, oil supply, especially from the United States, has underperformed to a much greater degree, leading to this underlying imbalance. And this is another way of seeing it coming out of the clouds here, guys. We're coming out of the clouds, peeking underneath, saying, buy me. Kevin Gordon, the Bloomberg Commodity Spot Index turning a very long, wide corner and trending higher. That's a breakout there. That's a new higher high, guys. I like it. Seth Klarman says you must buy on the way down. There's far more volume on the way down than on the way up, and far less competition among buyers. It is almost always better to be too early than too late. This guy sounds like me. I'm usually a little bit early, and I usually get my pickings. Now, I'm not trying to move, hundreds of millions of dollars or billions of dollars, where you need volume to buy. If you've got a large volume of money, you got to move. But that's just a saying, and makes sense. Freight futures AM update. Dry bulk was down quite a bit today for Capesize, down 4%. Panamax up 1%, and then the tankers down a little bit for Suezmax, and the LCC is flat. The silver to gold ratio here, which is the reverse gold to silver ratio, has a cleaner pattern than the GSR. When this ratio chart moves up, silver outperforms gold big picture. And that is what is coming since silver and gold broke out hugely a year ago. When purple pattern breaks out, it's go time. So this is silver divided by gold, the ratio chart. When we break this downward silver, which is all squeezed up, we've got a nice big surge higher, hit resistance, and then the slow leak off of sellers. This thing's primed and ready to rip. I think silver is going to do some crazy stuff. In fact, I should probably buy some more silver equities just to get the ultra leverage on this thing. For those on the website, the companies I'm talking about are little speculative silver companies. Hold on, baby. It's ready to engage. And I know you're up. Some of you guys are up over 100% on it. It's going to engage here. It's going to be big. So get ready. Smart. Okay, that's where we had last time. Let me see here. Yep, that's last time. So that's where we're going to end it. Give me a thumb up for the content, guys. Subscribe to the channel. Subscribe to the website. Special coupon code. Special is the coupon code. And that's all I've got for today. So we'll catch you next time. This is Finding Value.